Hello friends, welcome back to my channel Trader Vader. I'm your host Amar. So today we'll see how I traded Nifty options today. We'll start with the psychology analysis. If we look at the 15 minutes chart here, let me just start with saying that before we take any trade, we have to form a bias. You cannot just come into the market and start selling or start buying. We have to have a bias. So if we look at the Nifty charts on a daily time frame, let's see. So guys, if we see here, it appears that Nifty is kind of in an uptrend. I mean, if we look at the long-term view, we do see that there is a trendline breakout, but then again, if we see that when this breakout happened, if we see this breakout, when this breakout happened, you know, so Nifty kind of came from here, and then it's taking a retracement, and then after a double bottom, it's trying to go up, you know. So when we know that we are expecting Nifty to bounce back from 18,000 or 17,700 or 800, I would like to get into the market with a bias. So once I have a bias, let's say I have at the moment I have a bias of buying. So let's say I have a bullish bias. So what I'm going to do is I'm going to first, usually in the first 1 hour, I'd like to, uh, you know, observe the market to see what the market is trying to do. And before taking any trade, I usually would like to mark the support and resistances. So if I see the zone of the previous resistance here, so this basically would be a zone, right? If we go back, even if we go back, we see that market kind of is in a resistance zone here as well. So these would be my resistance zones. If I stretch it further here, and now if I look at the support areas will be this one. This would be a support area. Now, of course, many of you would think that drawing these lines in the hindsight, now that the market is already around, it's around 230, it's very easy to say that this is a support. So it's not like that, guys. Assume that, we don't have these charts. Still, we see that it has taken support here, it has taken support here, it has taken support from here, and the resistance is pretty obvious here. Before it reached the resistance somewhere around here, it has taken a resistance. So today, guys, what I did is the market opened. I just started watching the market in a 1 minute chart. Usually I like to take scalp trades. These days the market with the VIX and everything, it's pretty difficult to stay on a trade and survive the swings, and with the volatility crash and everything, at times, for example, if you're here in this particular fall, I bet the options C contract might have crashed heavily, and people would have lost a lot of money. So I would rather get out at a very first red candle than wait for the options to start crashing. So if you are an options buyer, you have to ensure that that you, when you enter, you get some momentum. You get out as soon as it dries away. So for me, I think 10 rupees on 100 rupees is fine. So that's 10%. If you're able to make 10% in one trade, I think it's absolutely perfect. I mean, I'm talking about 10% on the funds that are deployed. So now let's talk about the psychology. I mean, let me maximize this a little. So I don't prefer maximizing it, to extremes. I think this much is fine. So anyways, for the ease of visibility, I will expand this a little. So let's see what happened. Market opened here, pretty gapped up. People thought, oh my god, it's going to skyrocket, and probably people would have wanted to buy. But if we look at the 5-minute chart, you'll see that here after this red candle, there are a lot of people who might have thought, okay, the market is coming to fill this gap, and they must have shorted here, and then their SLs were hit here. And now people who wanted to buy would have thought, okay, market is breaking out the opening price, so let's enter. Now people might have entered here, they might have bought a CE contract or probably futures, whatever it is. And then later on, if we see the market slowly and gradually until here, I mean, let me tell you guys, I mean, when the market was here, I bet every buyer would have thought that this is a breakout and then market is coming to retest, now let's get out. And this week here, if I zoom it out a little bit, this wick that we see here, I bet a lot of people might have entered here, might have entered long here. The retail traders thinking that the market is going to go out. Of course, I'm also a retail trader in the process of learning. I mean, market. When you're in market, you're always learning. So, anyways, people would have entered here thinking that there's a retracement and it's going to go out, break out again, and then all of those traders who entered here, here, so basically in this zone, if I draw in this entire zone, all these traders would have been trapped basically, and the sellers who sold here will be trapped, looking at this red candle. So guys, that's what I'm trying to say. So I personally prefer to wait for at least an hour before I take a trade. So what I did today is I waited, market started to come down. Now as market started to come down, I started to look for possible support places. So basically what I think is, if market is coming down and if market is making back-to-back red candles, it is definitely going to take a little bit of retracement, or it's going to bounce back. Obviously, I'm not planning on a V-shaped recovery. So I would like to enter a place where market is breaking some sort of trend line on the upside. And, after breaking the trend line, it's taking a mini retracement and breaking that retracement again. So I think that is the kind of trade I would like to get in. And again, if we talk about the larger trend, it's on a buy side. So it's always, see, I mean, it's not like a buyer will make money today and all sellers will lose money. It's also not that all sellers will make money and all buyers will lose money. You can be a buyer, you can be a seller. You need to understand the psychology. You need to understand where you should sell on that particular day to actually make some money. You cannot just go on and if sell anywhere. So if I have to buy today, when I was in this zone here, I was thinking if I have to buy after these many candles, I was thinking if I have to buy after a certain activity that tells me that, okay, now the buyers are getting in. So how do I identify that? So if I go back to the 1-minute chart, now if I go to the 1-minute chart, let me tell you. So guys, I'll show you my order book as well to show that what trades I've taken, and it's not just one of those videos where I talk about a strategy, I talk about psychology, and then none of us are able to figure out how you can trade it. So I'll show you the order book as well. I usually prefer not to show you the quantity because this is just for educational purposes. I usually trade one lots. But you know what, if your psychology is in place, if your strategy in place, you can trade 100 lots, 1,000 lots. But I wouldn't recommend trading at all, especially if you're not well trained, and if you have not observed the market, if you have not studied well, if you don't know the risks of trading. So and of course, I'm not a SEBI registered financial advisor, so I don't have any rights to recommend. So it's just pure and simple educational video. So let's see, guys. So when the market started to come down, I saw that it's kind of forming a downtrend here. It's kind of maintaining that this particular trend line, and then here we see that there is a breakout of this mini trend line. So now remember guys, we are talking about taking a scalp trade. We are not talking about taking a huge positions and which will last for the entire day or probably the entire uh, you know so it's just, we have to understand that we are just betting on getting 5 to 10 rupees on our options. That would be 20 points on Nifty. So here, if we see that there's this mini trend line after this long selling, this mini trend line is broken here. Now, I wouldn't like to enter right away because, you never know. This could be a fake breakout. This could be just a retracement, a mini retracement, and it can just fall off from there. So I usually would like to wait, uh, you know, wait for it to break out again, probably in the same direction, show some huge candles. So this is the mini, you know, retracement that it comes towards the downside, and then this candle here, let me draw this candle here. This breaks out this particular angle again. This is where I first entered, guys, today. If I show you the order book, this is where, if you see 1024, this is where I entered the C options. I'll show you the C chart as well, 1 minute chart. So guys, I don't use too many indicators. Whatever indicators you see, basically for guidance. I don't base my trades on indicators. So I have this green line is a VWAP. So basically I keep an eye on the VWAP because I know that a lot of institutional traders add their positions at VWAP. So I just have to keep an eye on that. So here I was talking about we don't enter the trade on the first breakout candle that we see, which is this one. So I didn't enter on this one. Now where I entered is I waited for another retracement on the downside here, and then this particular candle was the breakout candle. This one, this candle broke out again. So and once this broke out, I saw that there was another green candle forming here, and I didn't want to miss it, so I entered here. If you see, this is the 1024. So if you see 1024, I entered this one lots, of course, as I said, at 98. Now what happened, guys, is I have to also bear in mind that the stop loss has to be at least 1:1. So here I entered at 98, and my stop loss was somewhere around below this particular candle, below these small candles that I see here. So these small candles, my stop loss was somewhere below that. So now what happened is, after this particular red candle, this one, I thought that okay, now we should exit because it could be a fake out. It could be that the fresh sellers, which usually happens, the fresh sellers are coming in, and then the market will come down. So I exited, as you can see, at 94. So around 3.3 rupees, 4.3 rupees SL I gave, and I exited. Now what happened is, as soon as I exited, guys, you see the market came down. If I talk about the options chart, also on the spot chart, you can see the market came down a little bit here. It came down a little bit, and then from the same support area, if I draw this support area, from the same support area, guys, this is the support area. Market. So this is the candle I was talking about earlier. This candle, a huge crash, and just see how much the options crashed. Huge. Even it broke the opening price, it broke the opening low, everything came down to the 90s, and it formed a support area here. Now when I saw that the market is taking support again from here, and it's starting to come up again, I re-entered, guys, because I kind of felt that there are buyers looking at the overall trend, the day trend, which is of course for buying, and then this is also the closing price of previous day. So all those factors came into play, and I re-entered at this particular candle, sorry. So this candle, I re-entered at this candle. As you can see my order book, I re-entered at 94. So basically 0.70 rupees cheaper, I re-entered again. And then as we can see, the price just kept on going up at this big candle. At this big candle, I thought that okay, I need to exit, because whenever the market makes such huge candles, and that too towards the VWAP, there's a high probability that the institutional traders, if the day is going to be a selling day, the institutional traders will add their positions here, and the market will come down crashing again. So I exited here at around 109. So that is, as you can see, it's almost 1:3 trade. So whatever losses I incurred here was recovered, and so that was the trade for the day, guys. And if we look at the day, how it went, as you can see, the market actually tried to come down, went up again, and from this VWAP zone, it started to fall, and it's coming down right now, and it's down and down. And another good setup for today would be, I don't know, I mean, we just have a very little time left, less than an hour. So if the market breaks this trend line today on the upside, the market breaks this trend line today on the upside, and for example, if as we can see, the triple bottom is formed now, market if comes back here, and then this way, if it starts to go up, then probably in one of these retracement breakouts we can enter, because then we can see a rally upside. That is something which I would plan, but if that happens around 3 p.m., then I would rather not trade, because it's too late for fresh buyers to come. So I would rather not take any more trades today. So usually I prefer to take not more than 3 trades. If the first trade goes well, then I don't take any more trades. If not, then I do take trades. So 10 rupees is usually, or I would say 10% of the funds I deploy in one particular trade. That is my target for the day. And if I hit the stop loss, if I hit the 10 rupees stop loss, that is the loss target for the day, as well as the profit target for the day. So that's it for today, guys. Please like and subscribe, share with your friends. I try to keep these I'll try to keep these videos as genuine as possible. Not planning on becoming one of those educators where I post fake videos of profits of crores and lakhs, and brag about my audio and everything. I'm just trying to keep it simple. Myself, I'm trying to learn and become a successful trader one day. So if you find these things useful, guys, please like my channel, please subscribe. So I'm not trying to sell you any indicator. I'm not trying to sell you any membership. It's going to be absolutely free for everyone. And also we'll talk about the market psychology every day. It's actually the psychology of the prices, which will actually help you to trade rather than indicators. Indicators will just be your guide, but you cannot always depend on them to take your trades. You will have to be able to analyze the market psychology in order to actually trade well. So that's it for today, guys. I hope you enjoyed the video. Thank you so much. Take care.